Today, the Bank of Canada announced a hike in interest rates. How will this affect the real estate market? So the announcement from Bank of Canada today, as you can see here on the screen, they raised their interest rate by 50 basis points, a 0.5% rise in interest rates. So how will this affect mortgages? So basically, variable rate mortgages will increase by that 0.5% because variable rate mortgages are tied to the Bank of Canada rate. And so they should, by the end of the day or the next day or two, the variable interest rates should rise right away if you're getting a new mortgage on a variable. Fixed rates, however, are tied to the bond market. And fixed rate mortgages did rise this week. They're more market competitive and they rose earlier this month. And so they may rise some in the next month or so, but it's not 100% for sure. So I spoke earlier with Heather Scaper from Mortgage Architects and just try to get their take on what's going on. Of course, none of them know 100% for sure because they're not sitting at the controls, but they figure that ongoing that the Bank of Canada, they meet about every 6 weeks, so they will probably hold tight for now, probably not raise it again when they meet in December, but they're expecting that they likely will rise some in the upcoming future, maybe in the first quarter, but they are expecting that fixed rate mortgages will likely fall sometime in the first quarter, anticipating the spring real estate market. And we can't forget that this is the year end for the banks, so most of them have had a good year. They've grown their mortgage business quite a bit, and so until they hit their year end, they're really not trying to be all that competitive, but will likely try to get a little more competitive in anticipation of the spring market early in 2023. Probably February, March, we may see things get a little more competitive in the interest rate market for fixed rate mortgages. So how will this affect pricing? What will the cost differences be on a variable rate mortgage if you were to be buying a home today? So you can see here, this is for the city of Calgary, as I had handy. Currently, the benchmark price for a home in Calgary is $527,400. So how will that mortgage be affected by this announcement if you're getting a variable rate? Just before the announcement, that mortgage payment would be $2,846.17. And with a 50 basis point rise or a 0.5% rise in interest rates, that mortgage goes up to $2,992.76, or of a rise of just a little less than $150. So we'll be watching this in the days and weeks to come to see, how many more changes are happening, and what point interest rates will top out and then begin to come back down again. As the interest rates are being raised and to try to curb inflation. However, it does slow the real estate market, but more so the job market, business projects, when the higher cost of interest tend to slow down. So watch this channel as we have more information, more updates. I do have a couple interesting updates coming up, interesting analysis for the province of Alberta and how that will compare to the rest of Canada, the interest rates plus the whole economic outlook for the country and how that will affect Canada versus Alberta, which is somewhat of a different province. So watch this channel for that as well. Talk to you soon.